Hey everybody, Carlos here from Foresight FX, trading mission and creator of the Inner Circle trading program, where we teach you how to trade price action activity and forecast price movement by identifying potential reversal zones and position yourself accordingly in favor of the trend. So today we're going to be trying to creating a quick trade setup. It's 1:04 in the afternoon, so I'm going to try to go and place a trade live and try to go for at least 10 to 20 ticks in the oil market. Alright, so let's just make an assumption here of what's going on, and immediately we can assess that the market is definitely on an upward movement. So this is a uptrend market, so I should be focusing on buy setups. The other thing is that I need to address is what's been happening on the market lately, and what information can I get from it? Alright, so basically you notice here the market is having a lot of trouble breaking through those highs right there. There's multiple highs that the market is just having a lot of troubles going through it, right? There is a very interesting fact about that. Let's just take it one step at a time. The market has tried to test the higher grounds here of the 3175-ish area 1, 2, 3, 4, or 5 times in a row, and they haven't been able to do so yet. Now the other thing that I notice is pretty important, the fact that they haven't actually pulled back down yet. So that means their intentions to continue to the upper side is extremely high. So that means that I can just pretty much use the most recent price action activity, and I definitely can then put my potential buy set up in those area, and I'm pretty confident that by now, by 1:05, the market should have pulled back even further down by this time, and it looks like they're not doing so. So right now I feel confident of placing a floating order to go long. I would say at the 68 level. And if I get filled, I'm going to pretty much use the information that the market has done in a 5-minute chart to calculate the next potential upward movement. Okay, so let's just bring that in. Alright, so basically I'm waiting for the opportunity to go long this market. I'm placing a floating order around that level, right? And I'm just trying to protect myself here by understanding where the most common support has been. This is a perfect pennant or triangle formation. Based on this information, I have a potential retest of the previous high, and I'm probably going to use that as a potential target, because the most common sense is that the most likely they're going to try to take the high of the day, right? So if you know your market and you know the profile of your market and what to expect at what time, that's pretty much what we can expect. One thing. Number two, I understand the 80s is a very important level on oil, so pretty much they're going to try to take it and take the prior high. If they do, the optimal potential high tendency for the market reach 32 level is going to be extremely high. So once again, I'm just sitting tight here, waiting for the opportunity to be executed into this market to the upper side, and my stop loss at that moment, I will probably going to be able to maintain it a very tight stop accordingly. Now, how can I project that opportunities to the upper side? It's extremely simple. One of the key thing or ingredients that you can do, obviously we go more in depth in the course itself, if kind of identifying what the market has done in the last couple of hours. So in this case, I'm just taking this information right here and try to go back in time and try to find when this had happened before, that the market is just pretty much upward but kind of sluggish or sideways. So I notice here that the market went up, and that's another one, and then the market just got pretty much unbiased in this area until they broke to the downside and then to the upper side. So these two guys right here are very important for me to see, that are similar in the pattern of recognition that I can definitely see. For instance, the market went up here and then sluggish, right? So here's another one. So basically, what do we do with this information? The way that I played it out is very straightforward and simple. I say, all right, what the market has done after the process of the sideways when they break above in direction of the trend. In this case, for instance, the market went sideways and it just went up in this area right there. The market in this case it was sideways until they actually went ahead and went straight down. So they went to the downside. Now this is something that I did and developed on my own, so I'm going to teach that also. Here's a sideways. The market before pushing to the upper side just burst in this manner right there, then sideways until they actually burst and find important resistance and supports in here. All right. So the next thing that I need to do is measure how much in points or ticks these guys are haven't done. All right. So basically, we can just come by, and I would say from the breakout, that's a trick of the trade. We're talking about a 22 pointer. That's another one right there. 28 pointers. That's another one right there. For 49 pointers. Here's a sideways from here to here. That's another one of about 26. Now we find a pattern here, right? So we probably see a 20, 20-ish, 26 on average of 30. So I'm pretty sure alright, we just got in. I'm pretty sure that the market most likely will move about 20-ish point of movement, and you'll see that that's pretty similar. This one's a little bit higher than the usual. So you know what I'm going to do is just to make sure to bring in every Calvary here. I would say 28 plus 26 plus 22, divide that by 3. We're talking about 25 points. So you know what, I'm probably going to go for 20 points in this one, because I'm more often than not, I'm pretty sure I'm going to get it. So that 20-ish could be right there. So let's just create a right click, sell limit. Hold on, there you go, right at that price level. Right now they're pretty close to the resistance points, which is a previous high right there. Profit is a profit, but you will know that most likely that's exactly what they'll do. So I'm just going to move it to my target. So I'm going to be pretty sure that the market will go through it and fill me up. Okay. In the meantime, I need to understand on the other part how much this guy's, hold on, that's a 39 pointer, how much this guy's most likely will pull back, and I need to select the right path of potential, right, to protect my account right here, or my position. So basically what I'm going to do, I'm going to take the most recent pivot low and place a sell stop right there. Now you probably would say, hey, you're risking more of what you're going to make. Well, this is the point of the video itself. I just want to make sure that you can see the validity of what I'm talking about and the possibility of the reasoning of being right on forecasting price movements, right? So right now I'm pretty sure and confident that based on the price action activity that the market has done so far, we're pretty much going into a long position, and we can also predict based on price action how the market most likely will react. Now I am going to pause the video and bring back what I call the synergy zone and call to the T what's the most probable upward scenario in this movement to the upper side. Alright guys, we're back, and finally we got the precise levels based on the lower time frames. Quite difficult for me going on the 5-minute because I'm typically accustomed to do this on a 30-minute and 1-hour chart, but basically here's my expectancy. I'm forecasting that the price is right now at 1:14 a.m. are going to head towards this area right there, and this is what we call the sell pressure area. I'm expecting the market to reach anywhere between the areas of 31.85 to 31.91, and the market take a slight breather in that area, and that has been confirmed a couple of times based on the price action analysis, but also using a combination of LEOA patterns, Fibonacci's, and support and resistance on the prior levels. So we'll see if we actually nail that to the top or not. I'm going to pause the video and bring back the results. Alright guys, we're back, and as you can see, we made the right decision once again. We're trading two small contracts right there. The market just piercing through this resistance point. But once again, take a closer look at the beginning of the video when I mentioned the price action was telling us something. I mean, the market was piercing towards the upper side and being rejected. A lot of people might think that might be a great place to sell, when in reality the price action was telling otherwise, that although the market was coming up, coming down, and coming up and piercing a little bit further up and fading to do so, is in fact a real intention for the market to go forth and take that opportunity towards the upper side. Another foretell that you can use on your favor is understanding that by this time the market should have been pretty much going towards the downside and doing a big correction of all the movement that they did in the morning, right? Since that hasn't happened, it just made clear sense for us as oil traders, right? That right at the end of the day, the market most likely is going to try to bash up through the higher grounds and try to close at the highest level possible, as this is usually the typical scenario on the energy market. All right, so here we go. We're already up. I switch into monetary, but it's only 5 ticks. So let's see if we nailed up that potential forecast to the upper side. But in the meantime, so far so good. We're being profitable. I can pretty much move my stop to 1 tick profit and let it go and protect my capital. But what I'm going to do, I'm just going to tighten my stop now. If you notice here, I've been pretty much tightening my stop, and I can just continue doing so. So basically I can use it and tighten it up even further more in this area. So I'm going to pause a bit and bring back the results. Alright, here we go. We're already 11 points. There's no point for me to risk money. I'm going to put my limit of 73. So this way I'm not losing money. I'm already pretty much about 280 in this contract. And you'll see how we probably going to hit that 85. So what I'm going to do, I'm going to move my exit right there at the 85 level. And live in front of you, you can see how we call it up front, right? So isn't this pretty cool? Let's see if we don't get stopped out and we actually retest that high for a second or not. So far, the high on this level is 84, and 1 tick away from the protection. I mean, the reaching the probable high or forecast that we did a couple minutes ago. Okay, so I'm gonna give it a shot. Alright, we're back, and the market is taking quite a little bit longer, so I'm going to try to give it a little more space. I'm going to protect some of the profits, but still give it enough space for the market to come back and down and up. But we're pretty confident that the market might trigger that potential 85 to 88, even 91 level. Alright guys, so basically I feel like I'm going to move my exit at 76. 3 ticks away, 1 tick below. Yeah, I'm just going to put it right there. I'm locked in a few ticks. Alright, here comes 130, and 130 typically tends to do a pullback on the market. So I just want to give it enough space. But you know what I'm going to do, I'm just going to plain and simple, if they get me out, it's okay. Just want to make sure. There you go, we're out. That's 120, that's 110. So far so good. We can complain in terms of that we were profitable, isn't it? So basically we were expecting the market to reach 31.85, and plain and simple the market reached 31.84. That's that's a problem with trading on the small time frames, but the proof it's here that we were able to predict the intended move toward the upper side, which is the most important thing. We missed by 1 tick. I'm not going to complain about that, and we walked away with a profit, and that's the key factor here of real trading, right? So hopefully you can see the value and the potential and power of understanding price action movement, price action behavior, and reversal points. In this case, it's going to translate into a very successful consistency ratio of winning trades on your side, if that's exactly what you're looking for. So if you're a struggling trader that you have not been able to make consistent trades at the end of the month that translate into a positive trade account, right, where you can subtract some of those or withdraw some of those profits to do whatever you need to do with those fundings, then something is definitely going on with your trading strategy. Probably it's not wrong, but maybe you need to adapt a more consistent methodology on top of it, and that will translate into a more consistent winning methodology on your own. So I'm opening up the doors for the Inner Circle, my class of 2016, where I'm going to be teaching you how to predict market movement with high accuracy and translate that into any market so you can become a consistent winning trader, just like what we did here live in front of you on the oil market. This is Carlos Diaz from Foreside FX Trading Mission and the Inner Circle Trading Program. I'll see you in the next video.